My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. In the past, this had always been a long commentary. And whilst I would like to condense it as much as possible, I still feel it may be quite a long commentary anyway. Okay, the basic drivers in the recent past have been the same here for many months, driven by the same key patterns. They are the October 2020 to March 2021 bullish shift pitch, notably the upper tine, currently at 23,820, and the more recent November to December 2021 bullish Andrews pitch, notably again the upper tine, currently at 24,245, and also the middle tine here, currently at 22,730, and that's more recent. Now, please bear in mind that both these two pitchforks have been broken, but I've kept them on the daily chart because they still work. Indeed, I'm inclined to view both breaks as more of a breach, a substantial breach, but not a full break, not yet at least. Additionally, there has been another pattern that I have previously highlighted and which has come to fruition during January. So, if you remember, September 2021 was a large monthly key reversal down. But then October 2021, on the other hand, was an even bigger immediate countering monthly key reversal up. This led to the latest addition to this complicated mix. It was the whole of the action from late June 2021 to January 2022 as a huge, really big diamond pattern. I admit it was a little lopsided to the top right, but I had hoped by now that you could see what I've been talking about. This diamond was a bullish continuation pattern. The target X for this diamond was in the 22,725 area, which was achieved in the middle of January. Since then, we've had that break of the recent bullish pitchforks even, but prices have settled this past week, moving up on the middle tine of the bullish Andrews pitchfork, the more recent one, and occasionally capped by the longer-term upper tine of the bigger and older bullish shift pitchfork. These two tines seem to be currently running the show. However, this cannot last as they narrow by about $40 a day. So going forward, it is especially worthwhile to pay close attention to these tines to see if eventually the market follows the older, shallower bullish shift pitchfork or the newer and more acute broken bullish Andrews pitchfork. LME 3-month zinc. Since the fall down the far side of the mountain in mid-October and early November, the market had gravitated towards the broken uptrend, the old May 2020 to date, and indeed optimized uptrend currently at 35.18 that I'd kept on despite being broken, as it has given a pretty good account of the bullish angle of attack of this market. Now, assisting and running parallel to this uptrend has been the rising short-medium moving average, currently 34.86. This optimized uptrend had shown the bullish angle of attack for many months, till it stopped working correctly in early October 2021. Since the move down the far side of the mountain, the market had reacquired it, especially since prices cleared the 33.02 to 33.66 congestion. This it did in mid-December last year and more or less immediately started a fresh bull channel, currently 36.32 to 37.97. This worked until yesterday, or rather it was breached yesterday. However, I suspect the middle tine, currently at 37.26 of the early October to early December 2021 bullish shift pitchfork, has capped this market, and despite it being breached a few times, has apparently been the new driving force in moving prices lower. I had warned about this recently, but I thought it would just accelerate the rise rather than cap this properly. The question now is whether this current breach turns into a proper break lower. I suspect the key is below, in the October-December 2021 50% Fibonacci level at 34.77. That's just below the rising, optimized, broken but surprising still valid uptrend. Now, additionally, another support is now peaking over this key 50% Fibonacci line. That's the short-medium moving average, currently at 34.87. Not too sure on its strength. I suspect it's not that as great as one might imagine. But being so close to the 50% Fibonacci line and maybe drawing power from it, it may excel. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.